We think it's right to stay risk on into 2025. So we've been basically overweight equities since Q1 this year. So we've run this rally. We've seen the S&P up almost 25%. So I'm not surprised we're feeling a little bit of a pullback towards the year end. But we think actually you've got a very benign macro backdrop. Growth reasonable, but not too hot, sort of 2.5% sort of GDP for the US. We think the policy response in China will help a bit. We're not necessarily China bulls, but we think you'll get 4.5% growth there. And even Eurozone, obviously growing more slowly than those two other regions, is going to do okay and certainly avoid a recession in our view. So you have that relatively benign macro backdrop, a couple more rate cuts coming in at the same time. And then the third leg of the stool, and this is the critical one, is that the earnings come through and you start to see corporates delivering on profitability. And that's the real key.
I'll hold off on earnings because I know that's one of your specialities and I've been plugging away with you in many years about. But the broader, you said something there, the broader outlook is benign, the macro is benign. As not a pessimist, but someone who's, maybe I'm a pessimist, I don't know. But as a journalist, let me challenge that as well. I don't think the macro outlook is benign. I think China is in a tricky position. There are certain sectors which are phenomenal in China. I make no bones about it. The EV sector, but the Chinese consumer refuses to spend money. I doubt very much, in my own humble opinion, that China is growing north of 4%. It just doesn't feel like it, looking at what's going on with global trade flows, look at products that are going into the country, etc. as well. I think Europe is in recession in parts rather than a skirting recession as well. And I think the US, you could possibly argue, has had the best of it, and the consumer is as maxed out, certainly in the bottom third or certainly the bottom half, as it's going to be as well, and they're beginning to struggle. I've challenged you on many fronts.
Yeah, no, that's fine. Look, I think on the US, you're right. There has been this bifurcation with the wealthy households and the low-income households, and that's been going for a long, long time. But that's been exaggerated by some policies. We would argue still a couple more rate cuts to come. We'd also argue, looking at the corporate sector, you have got this situation where default rates seem to have peaked, and it's a very rare stage of the cycle to see sort of corporate profitability improving, default rates peaking, and the Fed still cutting rates. So it feels to us that there's been a little bit of a disconnect in terms of the timing.